Hello and welcome to the Money Tree. I'm David Holt.
And I'm David Marks.
And we have special guests with us today.
We do. We actually have a live studio audience here with us today.
So. It happens to be my family and 2 adopted into my family. And our camera guy, usually it's just 1, but we've got 8 in the studio today.
Wow. So big crowd, right?
Big crowd. Mm-hmm.
I think that I heard the tickets went for a very high price. So that was good that they...
It's called a free lunch from a friend of mine. So they had free lunch. They walked in the studio and... I was trying to get my wife to come on.
Well, I started to bring that up. I think one fascinating fact is that the actual, maybe creator or mastermind, that'd be a good way to put it, behind the show is actually in the group watching the show today. Mm-hmm. So you just can't see her because she's not on this side of the camera.
And we do what my wife says.
Right. Well, you know what they say.
Happy wife,
happy life. That's right.
That's exactly right.
Yeah.
We appreciate you guys watching. We always want to thank MountainValleyNewspaper.com. They've been so good to us.
They have. And, of course, also Farmers Telephone TV. They've done a great job.
Yes. And now WVSM, AM 1500, 103.1 FM Rejoice. They also carry the audio version.
Do you get like a supplement for every time you say one of those? Is that how the contract works with what you get paid?
I get double what you get, which is double of 0, and then it's all 0.
It's hard math right there.
We got a fun topic today.
We do have a fun topic. It's almost as fun as pulling teeth, but it is something that's very important.
It's a necessity.
It is a necessity, and it's something that will cascade and will go over multiple generations. So it's not just something that affects someone that's 20. It affects someone that is 30 or 40 or 50 or 60, 70.
Do you know what that word is?
Are you asking them or are you
asking me? I'm asking them, and I'm letting you tell them.
That would be health insurance.
Health insurance.
Oh, the good old health insurance. And, of course, we know that by the time this TV show airs, that health insurance could change because you never know what legislation is going to come through. And, of course, Washington has a huge impact on our life.
You just can't go without it.
You cannot go without health insurance. It's
you can, but it's
not. And I think that's one of the things now that you can, but you're going to be fined, if I can put it that way, taxed. You're going to pay a penalty for not having it. Mm-hmm. So you can be one of those lone wolves who lives out in a cabin in Montana somewhere, and as long as you're off the grid, then you might get away with it. But if you earn an income and you have taxable income, you must show evidence of having health insurance. Why do you think that's the case? Why do you think that our government is looking at why people are forced to buy health insurance?
Well, I would imagine because the staggering cost, and hospitals and doctors weren't able to keep their business or doors open. I mean, people wouldn't pay or couldn't pay.
That would be part of it. You know, what you have here is you have a system where we have a company. It's almost, let's think of it like this. If we have a swimming pool, we'll say a 4-foot above ground pool, not a real big pool, and we're wanting to fill that pool up with water, because it's going to take a lot of water, right? Mm-hmm. Well, if you try to fill that up a cup at a time by yourself, it's going to take you forever, and the cost, quote-unquote cost, is going to be great to you to do that.
Right.
However, if we have 1,000 of your neighbors come by with a cup of water, we can make that A, more cost-effective, and B, fill up faster. So insurance kind of works in that way. It's where you have a pool of people. Do you like that? How I tied those two
Great
together.
analogy there.
You have a pool of people who are contributing to this, so when one of those members jumps in and splashes some of the water out, it's easily put back in.
That's a great idea.
Yeah, so
very good analogy to help us understand.
I worked on that for about 5 minutes before we started recording.
Did you?
Yeah.
Well, you did a good job.
Thanks. So basically, we want to break down to you what it looks at to have health insurance. Now, before we get started into the different type of plans, which is something we do want to do, we first want to talk about some key terms that are important to know when you are going to get health insurance. Okay. Because we may think health insurance is just health insurance, but there's all kind of different moving pieces to that wheel and different parts to it that you need to know about.
Like parts of a puzzle?
Kind of like parts of a puzzle.
Okay.
So we're going to do that? Let's go ahead and look at our first slide if we can. Looking at our first slide, we can see that the first thing we want to do is talk about the terms that can fit in with health insurance, and the first one is premium.
That's the stuff you pay every month.
That in layman's terms, that is what you pay every month for your insurance. Now, is everyone's premium the same?
No.
No, it is not. And actually, since the Affordable Health Care Act, also known as Obamacare, came into place, premiums really were, I don't know a good way to say it, but might have even been adjusted based off your income level. Where at one point in time, you go to work for Company A, And you, at that company, everyone pays this premium per month, which would be partially paid by the company or the corporation. The rest of it would be paid by you. Well, once the Affordable Health Care Act came into place, now what you have is you have subsidies that the government provides to the companies to offer health insurance. And so when you have that, people who are in a smaller income bracket pay a lower cost based off the subsidy. Now, another part of that, and why we're kind of in the debacle now that we're in, is those subsidies run out. So after 2017, a lot of those subsidies ran out. The companies themselves had to raise the price to what it would actually be. Those people who were paying a much lower rate don't want to pay that rate, and they drop their insurance. And that's why we had so many companies fold that were part of the National Affordable Health Care Act. So the premium really plays a big part into what the insurance is going to cost you monthly as a standard rate. And in education, we both work in that. Do we pay a monthly premium?
We do.
We do pay a monthly premium. And when I first started teaching, I know this is going to be an astronomical number, brace yourself, but it was $2 a month
for single coverage.
For single coverage. Now my insurance is $30. So, you know, even though I pay a very, very low end, you've got to consider, remember that pool is very big of the people who are contributing to that. And of course, organizations like AEA have helped fight on some of those things to keep those costs down. The second thing we want to look at is your deductible. And this is a term, and again, these terms, I wanted to give these because a lot of people hear these terms, it's thrown out there, but they don't really know exactly what that means. So I'll let you cover deductible if you want.
Well, to me, deductible's like, I want to relate it to a vehicle. Let's say a couple months ago, someone backed into my car and I had to have it repaired.
Okay.
So when I go to the repair shop to get the estimate, to go to the insurance company, once we decided which company we wanted to use, there's an upfront fee that I have to pay. It's on my policy. Once I pay that, then the insurance company picks up the rest.
That is correct, and health insurance works the same way. So basically, to put this, and remember, everything's different, so if we give a number, that doesn't mean everyone follows that number. But this is just a general number. So if you're an individual, most likely your deductible is going to be about $7,150 for the year. So if you exceed that $7,150 for the year, then your insurance company may come in, and I'm going to use that word may because I think that's important. They may come in and cover the rest of your cost. Now, depending on what you have done, what is wrong with you, who you visit, things like that, that cost can, of course, fluctuate. For a family in 2017, it was $14,300. So you see a large jump there.
Chunk.
Now, why do you think the difference in individual and family is such a double the price?
Because you're covering more than just the one person.
Right.
Sometimes 3, sometimes 6 or 8, depending on how many's in the family.
Right. And the more people you plan to cover with one policy, the greater your chance of having to cover a major medical expense. So that's something that you need to keep in mind with your deductibles and why they are higher for a family plan. All right. Next word, co-payment.
That's what you have to pay when you go to the doctor.
Yes.
You pay an upfront $30 or $35, and then the insurance kicks in for the rest.
Right. Well, and that is exactly right, but there are limitations to that. So just keep that word co-payment in mind. When you and I go to the doctor with the health insurance that we have, then we pay a flat rate deductible, right? Some insurances and some policies will be different, though, and we'll talk about that in just a few minutes. Co-insurance. Is that a new one?
That's a new one.
Okay. Go ahead and tell everyone what it is.
It's percentage of allowed changes for coverage services that you're required to pay.
Right. So this is going to lead into what we're talking about when we start talking about your insurance cost with your provider based off seeing someone in office. So let's say that your copay is $30 per doctor visit. However, if you go to a specialist or something else, it may be 20%. 30%, things like that. So there can be a co-insurance cost you may have. So where, and typically the way it works, if your co-insurance and copay is a lower percentage, your premium will be a higher percentage. Okay. Not always, but it can be. So you go to your doctor, it's going to be $30. That's every time you go. However, you fall and break something, or you have, something happen, and you go to see a specialist, you may be required 20, 30% of that cost. That's the charge.
And to me, we've talked about this before, how you and I are more stable. And what I mean by that, we like the commitment of being in one place for a career. You know what I'm saying? I'm
Right.
talking about millennials.
Right.
Millennials are the
I'm a
ones that want
millennial,
to change
supposedly.
jobs more frequently.
Yes, and insurance is something they really need to consider in their benefit package.
Right.
Because when you change jobs, you change. Even companies can change. And I know there's something that was very close to my family had this situation where their insurance was under, like, we'll say, a silver plan with Blue Cross and Blue Shield, which is a provider in our state. And their premium was $800 a month. Well, then their company decided to change to a platinum plan, which would be more like $1,200 a month. So they saw a huge jump, and that's a lot of money out of pocket to you. Now, of course, you may say, well, yeah, it covers acupuncture. I mean, realistically, and I'm not saying that their platinum plan does, I just threw that out there. Realistically, some of the features in the platinum plan are not things you would probably ever need, because this is not going to cover anything like dental or things like that. This is just health.
Right.
So you really need to weigh out your options on which policy and plan is best for you, because you may be paying a lot more than you actually need to, or you may need to adjust what you're doing. You may need a better policy if you have a family.
Well, and that's one of the things I was alluding to. You and I are in education, so therefore we have this particular plan we follow. We don't have to worry about shopping around or looking for the best deal or being concerned. We have a package, and that's what we're all part of the same pool.
Right.
So,
well, and you could, I guess, decline or opt out of that, but then you're either going to have to pay the penalties or you're going to have to find your own. And the amount that we're charged, even for the family plan, is still very, very cheap compared to what a lot of other companies charge.
Right.
Next term is maximum out-of-pocket cost.
And that is an out-of-pocket maximum is the largest amount of money you'll have to pay for covered services during a benefit.
Right. So let's say that you are going to have a very serious treatment for cancer, and your insurance company pays a portion of what you have in your doctor visits, and you have your co-pays, but then you have to have some type of chemotherapy or some type of treatment. Costs for those things are astronomical, and we know that. Well, your insurance company or your insurance provider may provide a maximum cost. Now, it may be $50,000, but if you need a $2 million treatment, you would happily pay the $50,000, but the insurance company is going to pick up the rest. So that's how that works.
Okay.
Some policies do have that, some do not. They'll say, hey, once you've paid this much, then you have, or it's kind of like a deductible, but it's more specific. Like, we will pay a maximum, or you'll only pay a maximum for this. A lot of providers, though, are starting to go away from that because of the skyrocketing cost. Now, this is another one that really both you and I are affected by.
Right.
And a lot of people who have health insurance, and this is a really key term, in-network and out-of-network. So you hear that term a lot. You hear people, commercials, things like that. So let's talk about what those two differences are. And I mean, a lot of people are like, well, I already know what that is. But if you're in-network and you go to your doctor and he charges $250, okay? Your doctor being an in-network doctor with your insurance provider. In-network doesn't mean that he's on your Facebook page. It doesn't mean that he is, wow, that is a lot of phones going off there. It doesn't.
And it would be the camera guy.
That's right. It went off like 25 times. That was awesome. So in-network is where he has actually signed a contract with the healthcare provider, your health insurance provider, and he says, I will give a discount to your company for everyone who's a member of that policy plan. So he charges $250. He gives that discount. So the discount may be $75. So what happens here is when you go to the in-network doctor, the actual rate is negotiated at a lower price. So it saves you and the insurance company money. Now, you know, the insurance company would pay $140, and you have to pay what's left, which is $35, compared to having the $250 cost.
Right.
So going in-network, if at all possible, is always the best thing to do. Now, if you go to an out-of-network doctor, which is your choice, in America we have freedom, so you can decide, hey, I'm going to go to a doctor in Indiana.
Right.
Well, Blue Cross and Blue Shield of Alabama may not pick that up. So when you go to that doctor in Indiana, you're going to pay the $250 if your insurance doesn't pay some of it. And they may not. They may say, hey, we're not paying any of that.
Or they may apply it to a deductible, and once you reach that deductible, then they would pick up and pay for that.
And it's always better to talk to your provider.
That's why you have an 800 number on the back of the card.
That is exactly right.
Call when you have a question.
That is exactly right. So now, if we can, let's go ahead and break down the different types of insurance policies.
Okay.
Because just like we have different terms we need to know, and how those terms affect us. Now we're going to get into the meat of what this whole 30-minute program is about today.
All right.
So if we can, let's go ahead and look at slide number 2. With insurance, just like your automobile, just like anything else, there's different levels, there's different plans, there's different types. So I wanted to break down what these are. Now, I actually held my license for a while in health insurance, but I never sold a policy.
Really?
I never did. And I'll just be honest with you, I'm very frugal, and I want to get the best. You can go ahead and
Very frugal.
Right, I'm very frugal, and so if I'm spending, and that's with my time, so if I'm spending my time towards something, I want to maximize my best payout.
I got you.
Well, when you sold an insurance policy as far as health goes, they didn't really pay you much on it.
Okay.
So I was like, yeah, that's not worth my time, and I would do something. But I had to have that license to do what I did. So in with having the health insurance license, you had to know all these different policies that people could try to purchase.
Okay.
Because let's say that you go to work for a company, or you're a teacher or something like that, your company's probably going to provide that for you. However, if you are a farmer, or if you are an independent, wow, I almost didn't get that out, an independent business person, I tried smishing the two words together, then you may have to find your own health insurance. So now, after 2014 and after the National Affordable Health Care Act, you have this government website that you could go to, and you could try to find all the different policies, and they would make recommendations and show you companies. You can also go to a private company. When I say private, it would be like any type of insurance. You may have Alpha or State Farm or any of those kind of companies, and they can provide you with health insurance. And a lot of people in the past, before the National Affordable Health Care Act, would go to Alpha and they would say, I need a health insurance policy, and they sold them one. So let's start off by talking about the different ones and what each one does, and maybe give your input on what you think might be the best. Okay? I
only know of one, so I really am not the best I don't have the most knowledge on this.
Well,
if you had your license on it, then it would be
that'd be no. I want to give you the information, and based off what you know, you tell me what you think would be best. How about that?
That's fair enough.
Can we do that? Okay.
I can give you my opinion. May not
That's
be
what I
wise.
want. I want an opinion. So the first one we have is a health maintenance organization, also known as an HMO. Right. And they one thing about insurance is they love to throw acronyms at you.
They love them.
They love them. So an HMO delivers all health services through a network. Keyword, a network of healthcare providers and facilities. Some companies have even started building their own in-office or in-company clinics inside their business. So let's say that you have a large industry, Ford, and I'm just throwing it out there. I don't know if they do this or not, but you have Ford where you have a lot of people working in a manufacturing plant. Ford may actually have an on-staff, in-office doctor that stays there at the plant or whatever, that actually, when people get sick, they go in and see them. And that's actually something that's done at some of the companies here in DeKalb County.
Yeah.
So you can go in and see that on-staff physician or on-staff nurse practitioner, and if you've got a cold, you just take care of it there, and your HMO might cover that. Most HMOs require any kind of referral, though, before you go have anything else done. So if you're going to have a referral for a specialist, whether you have kidney stones or gallbladder trouble or anything like that, they're going to send you in, and you're going to have a referral before they'll cover any of it. So let's say that you're just, yippity-skippity going to jump out there and go see a gastroenterologist.
Yippity-skippity? Where did that come from?
I don't know. I was really trying to prep myself for saying gastroenterologist, and I don't know if I still said that right. So you're going to go see a GERD doctor, and so when you see that GERD doctor, you just take off yippity-skippity.
There's other names people will use for that.
No, that one. Tell a joke too, but I won't. So anyway, you go see that specialist about your digestive system, and when you do, you didn't get a referral. Well, guess who's going to take the brunt of the cost on that?
You are.
Because
you didn't follow the rules.
Your HMO is going to say, we need a referral.
And you and I are rule followers.
We are rule
followers.
Try to be. I've tried not to be a rebel, which doesn't apply to some. The next one is a preferred provider organization.
Which is what most people in education have.
Right. It's if you have anything with PHIP, you have a PPO. So that's
and that basically from the screen says a moderate amount of freedom to choose your healthcare providers, more than an HMO.
Right.
You do not have to get a referral from a primary care doctor to see a specialist. You do have higher out-of-pocket cost if you see someone out of the network versus someone in the network.
Right. So our doctor, my general physician, is in the network with PHIP with our provider, which is Blue Cross Blue Shield, which is a PPO. So therefore, when I go see him, I know my co-pays, I know what I have, and I know that the cost may be a little bit higher, but that is going to be depending on how many people, again, you have in that pool.
Remember the cups of water filling up the swimming pool?
So if you have a few people in that, so let's say you own a small business with 5 to 10 employees, okay, and that company provides you with Blue Cross and Blue Shield insurance, their premium may be for them $175 a week, and your cost may, if you match it or whatever you do, may be more than that. So it could be up to $200, $225, to where we pay $30 a month. Well, one of the reasons is
for single coverage.
For single coverage, yeah. That's what I have. One of the reasons that you have that is because the state allocates to cover part of the cost. So let's say that I just decide, or the state decides, we're not paying any of your health insurance, which would be catastrophic to education because it's part of the benefits package. It would probably cost me around $800 a month compared to $30.
Well, and part of the reason for that, years and years ago, because I've been around a long time, education employees forewent the raises they could have got for salary to cover insurance costs.
Okay.
So it's not like something that there was a benefit. You had a choice. You can get this or this.
Right.
And most educators felt like it was more important to have health care provided rather than to have a raise.
But I would agree with that. So, depending on how much that raise was. If it was like 15%, I might have been like, yeah, I'll pay my own insurance.
Well, when health care costs will be more than 15%, you might want to consider that the health care, a good insurance benefit package,
right.
Which is what we talked about a moment ago with millennials, which you are. Most of them hop around from job to job. It's just their mentality. Yippity skippity around. Yeah.
So,
you were trying really hard to get me to say that.
I was just trying to work that into the
successful
conversation. I do what I can. So the next one is an EPO.
I have no idea about that.
Okay, that is an exclusive provider organization. So think about that exclusive provider, context clues. What do you think that might be? You think it'd be only exclusive one doctor you could see?
Possibly.
Okay, well, let's just look at the slide and see what it actually tells us.
Okay.
It's a moderate amount of freedom, moderate being the key word there, to choose your healthcare provider more than an HMO. So you have more freedom than an HMO provides, but you don't have to go through the referral process from a primary doctor to see a specialist, but it's probably not going to provide you with as much as a PPO. So your freedom is more with an HMO, less than a PPO, but an EPO, man, that is a lot of acronyms.
That's a lot of acronyms.
Actually, typically will have a lower premium than a PPO
Okay.
would.
But there's no, if you go outside of the network, they don't pay anything.
They do not pay anything. If you have this type of policy and you go out of network, you pay all of the cost. So if you go, let's say that, and this is where this is kind of key, let's say that you find out you have some type of cancer and you have to go to Texas to get your treatments. Well, if it's a PPO, they may have something worked out with that cancer treatment center that they could help you with. But it being distanced from states, and you have that EPO, they may not have any. So now what happens when you need that treatment? You have to make a life choice. Am I going to have cancer treatment that may save my life, or am I, and have $1 million debt, or am I just going to walk away and not? So that's why this is why it's so important. This may not be something that affects young people as much as older people, but the cost of any kind of care is going to be high. Mm-hmm. And if you do not have a correct coverage for what you need, you may think you have a good insurance policy or a good plan and find out that you don't, and you're stuck out in the cold.
Right.
Or you're buried
Well,
in debt.
it happens to all of us. Many years ago, about 20, I was in California for a while and for a week for a conference and got sick with a earache thing. Went to the infirmary and they prescribed antibiotic, but California is a long way from Alabama.
Yes, it is.
So they wouldn't pay for the antibiotics that I needed, so I had to pay all that up front and then come back to my insurance company and file it. So I got some of it back.
I was going to say, did they reimburse some of
it? Yeah.
Okay. And I know you're looking at a difference in a cost of maybe $6 here, depending on if you do generic or name brand. Or out there, it might have been, I don't know, 40 or 50. I'm just ballparking.
It was a whole lot more.
Yeah, a whole lot more. Okay, so it was a much greater cost.
That's why I filed it.
Oh, I would have too. I would have been like, hey. So looking at our slide number 3, because there's so many policies that we can actually build in 3 slides. A catastrophic plan.
That seems like an additional thing that you would have for some major thing coming down the road you didn't see.
Well, if you're talking about life insurance, you could have that. But catastrophic plan as far as health insurance, let's say that you are a farmer.
Okay.
And I still would not think this would be a wise choice, but let's say you're a farmer and I mean you've just got to make ends meet and you're looking for cheap. I want the cheapest thing I can go with. Well, if it's a catastrophic plan, that tells you that it's only going to cover things that are
catastrophic.
Right. So, whereas you can go to your general doctor with a PPO or an HMO or an EPO, when you have a catastrophic plan, you could go to your doctor, but what are you going to pay? So that's why these plans are so important. If you're under the age of 30, so you and I both are out of luck on this one. If you're under the age of 30, you can purchase a catastrophic health care plan.
That was a long time ago.
Right. So, do you qualify?
No.
That'd be a no.
No. And probably the reason is because they don't think you're as healthy past 30.
Right, exactly. Well, and I can tell you that before I turned 30, it seemed like I could run, do stuff. I wouldn't be sore. And now I'm sore the next morning.
He's getting old, ladies and gentlemen.
Not old, but older.
30 what?
4.
35.
So you have lower.
I was going to say 35.
Well, you're close, almost. So you have lower premiums. This is a money saving thing. So let's say you're someone fresh out of career tech college or college and you're working as a salesman and your company does not provide you with benefits. You want to just have a plan just in case something massively bad happens. You go get a catastrophic plan to save you money.
Okay.
You'll worry about the other when you have a family.
Or a better job.
Right.
With better benefits.
Now, right. Well, with catastrophic, you do get 3 primary care visits before the deductible applies. So there you go. And you have free preventive care even if you haven't met the deductible.
Okay.
So there are some things like, a lot of providers may say, hey, we provide you with a health coach. I know that's a term that's been thrown around a lot here lately. They'll say, well, we're going to have this person call you. And
which basically says quit eating so much fat and exercise and lay off the cigarettes and alcohol.
And the wild living and all that's to go to bed before 3 o'clock in the morning and, try to quit jumping off buildings. Yeah. So, but now as far as that preventive care goes, we have to do that with our insurance and we have a PPO.
Yeah.
So what is that we have to do?
Well, you have to meet with a nurse and they draw your blood, check your blood pressure, see what your
stress levels and
stress level, but I was going to say your body weight,
BMI,
thank you.
Body mass index.
Yeah, I was trying to think of a good way to say that. I was going to say your fat level.
Thin air. Right, your fat levels. Well, there are different tests. I know that my physician, and I agree with him, he doesn't like working off the BMI as much because according to the BMI, I should be about 15 pounds lighter than I am now.
Yeah.
But the one he likes is where you actually take the height and the weight and the measurement of the around the abdomen, around the belly area of your body, and you see what their measurements are, and then you come out with what they are. Because according to the BMI chart, I'm considered overweight.
Really?
Yes, I'm considered overweight, and I'm about 10.
Heavy.
Yeah, and I'm about all those donuts, and I'm about 10 pounds away from being considered obese.
Really?
Mm-hmm. So, and of course, in time, this is where legislation is so important. In time, I would not be surprised to see a penalty monthly if you are in one of those categories. If you're
well, they already have one for smoking.
They do for tobacco use, and it's $50 a month with teachers union with the group we have. Now, I would not be surprised if you have high cholesterol or high blood pressure or diabetes, then you would see a $50 surcharge. I would not be surprised also to see a $25 surcharge or more for being overweight, and maybe even a $50 to $75 surcharge for being obese.
I think you're giving insurance companies something to try to raise our premiums.
They have already thought of this.
Oh, okay.
I'm pretty sure that if they could do it, they would have already done it.
Okay.
Without having people riot and burn the buildings down and stuff. So I'm just saying. So I know our time frame is crunched here because we're not doing stock picks this week. So we're building a little time. So our next one we'll look at is a HSA eligible plan.
Now, I have never heard of this before.
This is a health savings account, and this works. This is something you would need to check with your provider and with your company. So once I start talking about this, you've heard of it. Okay, all right. So HSA or health savings account usually works in conjunction with your PPO. The reason why I would recommend looking into this, if you can do it, is because the money you put into your HSA
It's pre-tax.
It's pre-tax money, and you get gains off of it. So it draws a return. So it's not just something you stick in an account and it's just sitting there. This is actually something that you can make money off of. But there are maximums like anything else. 2017, as you can see on the slide, it's $3,400 a year for an individual, and it's $6,750 for a family.